Next section. We're going to be watching an S&B Capital video, how to use RSI indicators for better entries. A lot of you have known me for talking a lot of shit about RSI indicators a long time. I don't really believe in RSI indicators or a thing, but I guess it's like, you know, belief does have nothing to do with it. It's a mathematical indicator. It has actual value behind it. It has a usage behind it. I personally just don't use it in my trading. I keep my trading a little bit more simpler. I keep it based on a bunch of other variables that doesn't really have to do with RSI. But RSI, very useful tool, helps you understand when a stock is overbought or oversold. And for beginners who kind of don't have that understanding, when you're looking at the stock, when you're looking at the chart, you don't really know how to read a level 2 or so on, an RSI indicator could help you time your entries better when a stock is being overbought or when a stock is being oversold. If you're one of those reversal traders that I like to call myself during 12 o'clock or 1 o'clock time periods, if you're a reversal trader trying to catch the stocks reversing back to VWAP trade setup, then you want to understand what a reversal is, right? What is an overbought indication? What is an oversold indication? An RSI tool could be used for that, and that's what this video talks about. Once again, this video is from SMB Capital, the Bible for day traders on YouTube. Go check them out.
In this video, you'll see.
Oh, the volume is not high at all.
World application of the RSI indicator to learn an easy trade with clear signals and simple execution. I'm Mike Bellafiore, and we're one of the top proprietary trading firms located in New York City and proud to develop numerous 7 and even 8-figure per year traders. Watch, take notes, and learn from a professional trader on our desk so you can grow your trading account.
Garrett here from the New York City desk. We've got a great trade example for you today, a trade that was identified by a trader outside our desk, and it was so spot on that I have to share it. So
Let's go.
A few days ago, I got an email from a trader, Ken, who saw a great setup in AFRM. Ken had watched our recent video on the RSI indicator, and he spotted this setup based on the variables that we outline in the video.
Okay.
So I was excited to hear that it helped him, of course. I always love to hear that, and that, you know, he was able to see this trade aligning after watching the video. So he asked me, how would I execute this trade? So this was a mean reversion setup. It was a setup that a lot of traders on our desk were hawking, actually. And so Ken's call out is a really great real world example of how we can use an indicator to help clarify a setup. Okay. And it really drives home what we covered in our RSI video. So by the end of this video, you will see how this stuff can really help in real time. So let's get into what Ken was seeing and also go over how I would consider executing this trade. And look, before we outline this entire setup, there's really an important point here that I should make. Ken used the information that he gained about an indicator in the right way. Okay. And what I mean by this is he used it to further strengthen an already existing setup in his playbook. Indicators are not strategies, right? We use indicators to...
Thank you. I'm going to let him finish and then I'll elaborate. I almost pulled an XQC moment here where I was like, let me say your point. Let me say your point. No, I'm going to let him finish. I'm going to let you finish. I'm going to let you finish.
Quantify things about our setup that might add edge to our trade. And this can happen in various ways. So in our example today, the RSI indicator, 1, alerts us to market conditions that might warrant a closer look. 2, it adds an environment filter to help us increase expected value and weed out the made-up trades, as we call them. And 3, it helps us visualize certain trade variables that may not be easily apparent. So let's talk about it. AFRM has been a very...
Okay. So obviously coming back to the point where he was talking about earlier, you know, all these indicators are cool, they're awesome, but they are not a trading signal, especially like a VWAP, right? When you have a VWAP, that's not a trading signal. It's a good indicator. It shows you when the VWAP is moving up that there's a buying demand on the stock. When the VWAP is moving down, there's a selling demand on the stock. Demand, is that the right word? But it's not a trading tool or trading signal or a trading setup, right? That doesn't give you an edge. Everyone in the world can use their software, boot up their software, throw on an RSI, throw on an anchored VWAP. That's not a setup. It's not something to make a sole decision out of. It's used to help you find information that you are not easily able to understand by just looking at the stock, looking at the levels on a daily chart, looking at the level 2 tape and seeing how active the selling or buying is. You're not able to simply understand using that, so you can use some of these other tools to help you, but at the end of the day, you still need an edge to begin with, and the edge comes from having an actual good setup. And SMB Capital talks about having setups all the time, and they talk about creating a playbook. I have a playbook. I've shown you guys my playbook numerous times, right? So understand that concept when it comes to RSI. I don't just shit on RSI just to shit on RSI all the times. It's because people use RSI simply to as soon as it goes above that overbought area or oversold area, they think of it as an indicator to, oh, this is a trading signal. No, it's an information tool. You still need to use that information to help you get into a trade that's around your setup, around your playbook. And that's the beauty of the tool. If you're not using it the right way, you're going to always hear me talk shit about it. All right. So now coming back to that video.
Very strong stock. It's been running. It's been up 8 out of the last 9 days. And so you can see on the daily chart, that fact is clear, and it's just been on a tear, right? So in this case, the RSI is above 80 on the daily chart. And on the hourly chart, the RSI has also been above 80 quite a lot. Now, I will never blindly short something like this, even though it's unusually extended. Strong stocks can keep going, right? It's very clear. We've seen it all the time, which is why we want a setup and a trigger for a mean reversion setup like this.
Like I said,
make a
mean reversion trade.
It's going to be on a much shorter time frame, intraday.
Mm-hmm.
It's not the only way to do it. That's just how I like to do it because it's a counter trend trade. So there might be an opportunity to fade this thing, right? Play for a pullback if we can find a spot where it's exhausted. Ken called to my attention on December 6th that AFRM was extended intraday, and he quantified this by the fact that both the 15-minute and the 30-minute charts RSI was above 80. And this is what we talked about in our RSI video. So here's the email from Ken, and I got his permission to share this. He looks at it with pre-market open, which is fine. Okay, so here's the 30-minute. And we can see the RSI above 80. And here's the 15-minute. And we can see the RSI above 80. So we have something that's been up 8 out of 9 days. The RSI is above 80 on the daily chart. The RSI has been above 80 quite often on the hourly. And now we have an intraday situation where the RSI is above 80 on multiple time frames. Because I don't like shorting strength unless I have a lot going in my favor, I want to see that it is extended on multiple time frames. That's really important. And this is what Ken identified. So how do we execute this trade? As Lance talks about all the time, and he has some great videos about this on our channel, and we can link it below, we want to be on the right side of the V.
I knew that was coming.
This means that
I knew that was coming. Right side of the V. That's right.
Risky and frustrating game.
You don't want to front run, right? You don't want to front run the short and expecting, oh, you know, it's not going to go much higher. You wait for the short to set up and show you. Now you have a defined risk. You have a defined stop. Now you know exactly where you're going to enter based on your enter and where your stop is, how much size you should be taking, because you know exactly how much risk you can now give the stock compared to where if you were shorting on the way up, you're probably getting chopped up and getting stopped out for no reason, getting burnt. And then when the move's happening, you're one of those traders that goes, oh man, I had the trade. Oh bro, oh shit. Right? Now you see the first sell, a lower high, and then another lower high and another lower low. You're getting short somewhere on this candle on the 15-minute. Your stop is all the way back up there. And now if you're playing the proper risk to reward, 1 risk to reward, 2 risk to reward, maybe even more risk to reward, you can kind of add on this area back to the downside for an even bigger move down. This is a little bit of a bear flag setup over here, that bear flag flagging and then breaking out, so you can take new entries with the risk somewhere on the high side of this candle right there. So or even the high side of this candle, because that tail wick of that candle showing you that there's a lot of selling over here. Anytime we pop up, it's just immediately getting stuffed right back down. So you could have, probably tape read that selling over here into this area and then added into this more selling down over here. Beautiful right side of the V. I knew that one was coming.
Best way to execute. But we can see the turn, right? And so in this situation, that's exactly what we want to do. So as I suggested to Ken, since we're trading off the 15-minute chart, and this is where our lowest time frame signal is, I would short the break of the first 15-minute candle. And if you want to be conservative, you can short the first close below the prior candle. Either way is fine. I always watch the tape here. I want to see offers start to hold. I want to see it feel heavy. And if we zoom into a 1-minute chart, we can see there's a retest opportunity at this level. So once it breaks that level, it trades back into it, right? So we short the break at 41.30 and the stock rallies back to this level and gets heavy again. So how can we see this? So as soon as it tests 41.30, it drops hard, and then it puts in a lower high.
I just said that. You're going to watch it on the tape. It goes up there, immediately gets stuffed back down.
If this fits your style.
Immediately gets stuffed back down.
Some traders only like taking the first trade with the stop above the high.
With how those candle wicks were showing, it was kind of obvious that when it went up there, slapped right back down. And you saw that right here on the 1-minute candle. It trickled. As soon as it got there, slapped. It went up there, slapped. So there's a seller here. That seller is not allowing the stock to go up.
Above the prior candle high. So that's one way to trail it, is you can just use the bars. And Lance has talked about that as well. So all the way to the close of day. So look, like I said before, we use indicators to help our strategies. Some might work well for us. Some might do us more harm than good. It all depends on what you're trying to quantify. Everybody's different. Traders on our desk trade different strategies, execute them in different ways, all with edge. So there's no reason to get dogmatic, right? There's a lot of ways to do things. Ken may find that this helps him stay in tune with a mean reversion strategy. I love to hear about it when traders take what we talk about and apply it in real time. So if you want to go back and check out our original RSI video where we mapped this out and talked about a few other ways to utilize the indicator, we'll link that in the description below.
So you're an active
All right,
trader,
maybe we should go check that one out.
Not doing as well as you deserve, and you just can't figure out why you can't become profitable. The RSI, Relative Strength Index, is one of the most popular indicators, but if
I remember watching this one.
Spot overbought conditions to get short and oversold conditions to buy, you're doing it all wrong.
Isn't that what I just said? Isn't that what I just said? Like, hey, you're doing it all wrong if we're just using it to do overbought, oversold. So this video, obviously, the first part of that, the second video that we just saw, which was the first video that we saw, was a trade idea example, and this one a more in-depth example, how to look at it on multiple time frames, how to adjust your indicator to look at it the right way, adjusting your mentality, I guess, how to even set up your scanners, going through some charts over there to kind of help you understand some entry and exit examples, especially on the hourly for the QQQ. Not a bad example at all in there. So yeah, good little video over here. I think I'm gonna save this video actually for tomorrow so we can expand on what we just saw today, and then we're gonna actually finish off the night by watching this one over here from Lance himself, a 4-minute video, and then we're gonna call it with a nice 2-hour long stream, an extra long stream tonight. But yeah, we had some videos to watch. I will be saving this one to watch with you guys tomorrow, a nice little 30-minute long video. Also, tomorrow is the last stream of the week, so we can wrap it off with a nice little educational video at the end of the day, learn a little bit more about the RSI indicator, more than we learned today, and then kind of start next week on a great note. Let's see what's going on over here with this latest Lance video, the boom bust cycle of trading and life, plus how to break it. I'm guessing this has something to do with his latest tweet today about how one of his most favorite trainees after 5 years of trading quit because they couldn't handle the ups and downs or whatever, I guess. I kind of skimmed through that tweet, but yeah, I'm excited to see what Lance has to say, because if you haven't thought about quitting, have you even pushed it to the limits, I'm sure everyone's been there. If you've been day trading, swing trading, investing, whatever it is, you've thought about quitting multiple times. If you haven't yet, then you're just beginning and you will eventually. So this video over here might be a little bit helpful depending on where you are in the journey, or not helpful yet, but eventually you'll understand once you get to that part in your journey.
The theme of today's quick video comes from one of my favorite questions I was ever asked. The question came about when I first started my advisory work at SMB in 2022, and many traders were struggling to adjust to the slower market. In meeting after meeting after meeting, I was pushing traders to return to basics, staying selective, waiting for their easy money trades, doing their daily report cards, and consistently performing weekly and monthly reviews. One brand new trader, totally unaware of the genius of his question, ends up asking me, "Lance, if you're always recommending traders return back to basics and following their best practices, then why do traders ever stray from it?" What an incredible question, because it seems so innocuous, but we've all been there and made that mistake. Why do we as humans tend to leave the best practices that have led to our success? And this also ties to the story of one of my fastest growing trainees ever. He hit his 100K P&L milestone faster than anyone else I had ever trained. Less than a year later, he found himself on the verge of getting fired. Why? Why do we stray from these practices that treat us so well? And this happens in all areas of life, not just trading. It happens with getting good sleep, or sticking to our diet, or sticking with our workout routine, and all sorts of other things. So why? It's because success leads to apathy. We all have been there, especially in trading. So often those awesome win streaks precede drawdowns and periods of struggle. When you're doing well, it becomes easy to overlook the practices that led to that success.
Overconfidence.
You no longer see the need to be so strict with your best practices.
Yeah.
You can skip a daily review or a daily report card.
Yep.
You can have a cheat meal, or you can go out partying and drinking out late. It's that apathy, though, that eventually leads to underperformance, and it often isn't until you hit rock bottom that you face the reckoning and return back to those same old best practices, often only for many to repeat the classic cycle again a few months or years later. As James Clear says, our outcomes are the lagging indicator of our past habits, and our present habits are the leading indicator of our future outcomes. This is why trader outperformance so often leads to trader underperformance. This is the reason for people gaining back all their weight after dieting, and this is even the reason why companies overhire and then end up overfiring during the waves of the economic cycle. So how do we escape the cycle and break this period of booms and busts? Here I'll propose a couple helpful ways. First, we want to develop a set of habits and best practices that are sustainable in good times and bad. What are the essential trading practices you need to do each day that won't burn you out or won't get skipped on a busy or a tough day? Perhaps a daily report card, a weekly review, and video watching. Or for the dieters, what are the essential foods
Video
you must
watching, daily
avoid
report
eating
card.
on a
I do it
stressful
every
day
day,
or while
guys. See,
vacationing?
you gotta fall in
Perhaps
love with
no
it.
dessert or more than 2 drinks per night, no matter what. Or what is the minimum amount of exercise you can commit to no matter how busy you get each week? Whether it is hiring or budgeting, working out or trading, what are the minimum best practices that you can do to always stay consistent and always have some standard bar that you can hit? The next thing you can do is to make these habits as frictionless as possible. That means making them fun. That means automating decisions, streamlining decisions, or even removing any easy outs. All these habits need to be as thoughtless and enjoyable to execute as possible.
Very well put.
Sometimes that means having a daily report card that includes just charts and no writing.
Yep.
Sometimes that means
I do that all the time.
non-perishable, healthy snacks always on hand. So don't get me wrong,
I don't
there
have
will
that.
always be highs and lows. There will be periods of more motivation and periods of less. Times when your focus is needed elsewhere. But having these minimum standards that you stick with no matter what ends up dampening the negative amplitude of the boom-bust cycle. So whether you want to apply this to trading or to dieting or to sleep or working out, figure out what your minimum sustainable best practices are that you can
I have non-perishable
throughout all cycles.
Warheads.
Thank you as always for watching.
Sour warheads. All right, but
What would escape from
whoa, calm down, buddy. All right, great video over there from our boy SMB Capital's very own Lance, talking about, you know, how people sway away from their basics that actually got them to a point they wanted to, but once you get to that point, you get complacent, you get confident, and you stop doing all those things like daily journals, report cards, trackings, and everything. Very well put. Obviously, don't fall out of the routine, right? Don't fall out of routine. If you go to the gym 3 times a week, and now you only go 1 time a week, and you're wondering why you're not losing as much weight or why you're not getting as much bigger, that you do the math, buddy. Do the math. You understand what you just, right? You can do the math right there, bro. So understanding that, sticking to your routine, staying true to your routine, staying true to yourself, and not lying and not cheating yourself out of it, and falling in love with the journey, baby. Falling in love with the journey, falling in love with the routine. All right, ladies.